Hello and welcome to Money in Motion video blog. This is Dan Perkins and thanks for watching. So here we had an interesting 2-week period of time. We started a week ago Monday with the market opening down 1,100 points. And then we had various substantial rallies, and then it looks like we're going to end the week this week down about 300, maybe less. Tremendous volatility, swings and shifts in the markets, ups and downs in all the market indexes. And it's the volatility that I've been writing about for a long time, is that we're in volatility. And volatility is a sign of a market in transition. As the swings get wider and wider, resistance and support levels are met and broken through. We're at that support level about where we were 2 weeks ago on that Monday at the bottom. It's possible that we might close the day today somewhere above where the bottom was on that Monday. If that's the case, then we would have a retest of a low, which would help us, give us some indication, are we at a market bottom? There seems to be a lot of volatility. Now everybody's going to focus on what the Fed's going to do at its meeting, or the jobs numbers, which were disappointing, going to force the Fed to stay off the raising bandwagon for a while, or are they going to just go ahead and raise rates because unemployment dropped to 5.1 as reported today. So it's probably a 50-50 chance that the Fed does raise, but there's now some rhetoric is that is it one and done? Meaning, will the Fed make one interest rate move to move interest rates up, and then the next move is going to be some significantly time later? Remember, as I said in my last video, that the market is an indicator of what's going to happen in the economy 6 to 9 months down the road. So it's telling us that 2016 is going to be a rocky road, and it's not going to be a great opportunity to make significant return. Our portfolios have done very well. The S&P 500 and the Dow Jones hit 17-year lows in the month of August, down a little bit over 6.5% for the month. Our portfolios did better than the market, or about in the market, so we're holding our own, we're getting our dividends, and getting the cash flow that you need to live on, which is very important. There were some opportunities, and some of you, I bought some stocks on the crash day. I haven't spent all the money. I still have a considerable amount of cash looking for opportunities. I got to find out whether this is a second test of a bottom and it becomes a hard bottom, or other things that could bring us down. I think the most vulnerable point, as I said earlier, is what is the Fed going to do with their September 15th meeting? My guess is that they will postpone for at least another meeting, maybe longer, especially if the market continues to be volatile. We had a big announcement by Chandler Gray and Christmas of the layoffs that were reported in the month of July. 47,000 people were expected to be laid off, and over 640,000 are projected to be laid off in the trailing 12 months, which is back to 2009 levels. So the economy, as I said, doesn't look terrifically strong. No else in the world looks strong. China is becoming weak. China this week reported that its Purchasing Managers Index, which is an indication of industrial activity, was below 50. Anything below 50 is a negative, meaning a contracting economy. Anything over 50 is a growing economy. They came in at 49, I think 6 or 7, so slightly under optimum. Volatility is going to continue to be a problem. One of the things about our portfolio is that in many cases we have puts on the S&P 500 that gives us some downside protection, which takes some of the volatility out of our portfolio. And we have the dividends, and cash flow is the great equalizer. So this is Labor Day weekend. Enjoy the last week of summer, and be advised that I'm watching the portfolios. If I see opportunities, I'll spend some cash, but I'm in no great hurry. The market's got to convince me that it's time to buy. Any questions, give me a call. Have a great holiday weekend, and we'll be in touch soon. This is Dan Perkins. Thanks for watching.